Ladies and gentlemen, welcome to today's podcast of Geopolitical and Geo-Economics Politics.
From a bird-eye view, how are you folks? Where is geopolitics of the world heading to, and how it reciprocates with global economic politics in tie-knot fashion?
And what common citizens of the world being told and how do they consumed it, we'll try to encapsulate for you.
Trade restrictions impacts geopolitical risks proportionally. As trade of goods, investments and services increases, it adds to risks assessments of war, military budgets and terror acts. But according to IMF reports published in 2024 suggests that the overall globalized world is not in decline despite high geopolitical and economic risks. Although in the 1990s to early 2000s, hyper-globalization came to an end.
But under the surface, there are increasing signs of fragmentation. Trade and investment flows are being redirected along geopolitical lines. Is it not how we see globalization, just like we see 7 continents? Can we not see block trade as natural subglobalization?
Yeah, we can. But what about the trade happened between, say, geopolitical blocks? In other words, within blocks, trade cannot overtake in between the blocks trading.
Okay, isn't a single reserve currency then itself a geopolitical risk?
It depends how we view it. Despite increased geopolitical risks, the latest data show that the US dollar remains dominant. It also accounts for nearly 60% of FX reserves, despite the gradual diversification of FX reserves away from the dollar and partly into non-traditional reserve currencies. So, from the very same token, localized currency systems can also be seen as additive to geopolitical risk, such as cross-border interbank payment system CIPS, a system launched by the People's Bank of China which offers clearing and settlement services for cross-border transactions in RMB.
Thus, the countries need a robust, rule-based global trade and finance system. One starting point is with collaboration of areas of common interest like climate, health, food security. A point to note is that a world ordered for decades by globalization and geoeconomics has quickly become a world grounded in geopolitical risk, while energy and climate change continue to be politically polarizing issues.
And let me add, the rise of nationalism and economic protectionism, especially in industrialized world, has led to increased scrutiny of the positive impacts of globalization, as geopolitical risks have the potential to impact the global economic outlook, influencing growth, inflation, financial markets, and supply chains.
And in 2024 conflicts such as the Russia-Ukraine war and the Israel-Hamas war, global economic outlook for 2024 suggests that central bank rate cuts in the US and Western Europe may be overstated, with policy rates projected to settle at levels above pre-pandemic lows. Consumer price inflation rates are expected to trend down but remain above pre-pandemic norms in advanced economies.
Speaking of interest rate cuts, dollars, and stock gains, as Fed aims for post-pandemic soft landing. So now the bigger question is, will start of US rate cuts good for Chinese economy? It definitely will, as consumer spending rises in US, give rise to Chinese exports.
And since monetary policy is still restrictive for the time being, but a turnaround in interest rates has been initiated, and tailwinds from more favorable financing conditions will increasingly support economics going forward. And in this context, Fed rate cut reduces yuan outflow pressure and opens up room for China's easing.
And on the contrary, UN shortages for Russia, resulting in liquidity crunch, is creating new inflationary pressures for the Russian economy. Russia's central bank last week raised its key interest rate from 18% to 19%, a widely anticipated move.
And speaking of monetary policy, The geopolitics of global reserve currencies and safe assets gave rise to alternate to US dollar discourse.
Can the rise of regional reserve currencies is going to be a replacement process? Well, the answer is no. There always had been a dominated world currency, but since the turn of the century, the US dollar has lost only around 10 percentage points of its share of global foreign exchange reserves, so it'll be decades before some other country will possess such a liquidity which could make their currency for world trade use.
However, central bankers have been holding more currencies from smaller economies with a strong credit rating, which tells how interdependent the economic order is. And how does the international balance of power interrelate with economic trends?
Despite the multidimensional relationship between the US and China, particularly across trade, supply chain, and economic spheres, US-China relations have become more complex in recent years, as the growth of nationalism, protectionism, and populist movements in recent years has created an environment of increasing uncertainty and could potentially lead to deglobalization.
Among these challenges are energy security worldwide, supply chain resilience, which is crucial in the face of various disruptions and risks, including geopolitical tensions, natural disasters, and operational issues, and they remain a top 2024 economic and geopolitical risks.
There are several other financial factors which triggers numerous other risks, such as the geopolitics of global value chains, gradual globalization and decoupling, sanctions, the strategic allocation of financial aids, economic dependence and interdependence, and trade war effects on capital flows, foreign investments, and asset prices.
And there are competitions which can also trigger the economics of wars, such as alignments and alliance formations, technological sovereignty and competition, defense expenditures and arms trade, energy and food security, and climate risks will have far-reaching impacts on national security and global stability.
Among other factors is water scarcity, which can cause almost half the world's population to live in the areas of high water stress by 2030, as global energy consumption continues to increase, as much as 50% by 2030.
So will the demand for water supplies and resources to support this growth? This will place the energy sector into greater competition with other water users for already limited freshwater resources in many regions of the world.
So, from a bird eye, how do you see geopolitical and geo-economic stage set up for the upcoming future?
I think countries will strive for the following: securing raw materials and critical inputs. And even the developed economies find trade momentum to remains weak amid signs that global manufacturing production is currently slowing down again.
I think the countries will develop more efficient payment systems and more liquid financial markets, making it increasingly attractive for central banks to hold reserve assets in an ever broader range of currencies.
On the other hand, I see increasing technological sovereignty and competition. Since countries seek to be able to develop the technologies they deem critical for economic competitiveness and transformation, such as an AI space, that could result in greater positives and negatives.
The same can be seen for defense expenditures and arms trade for the US, China, NATO, and Russia, based on 2022 to 23. It's $820 billion US dollars, $236.1 billion US dollars, 1,341 billion and 84 billion respectively.
And that concludes today's podcast of Geopolitical and Geo-Economics. Please like and subscribe. We'll see you later.
Cheers.